Hello everyone. In this video, I will discuss why I prefer Unity software to Applovin as an investment. Um, and we will also look at what these companies are doing, what they are, try to understand everything about these companies, and then look at, you know, the public thoughts on these companies and see, what we can see on Twitter. Now, the history between Unity software and Applovin is actually quite, um, long standing. Um, they have been competing for years, and they are competing in in-game advertising space. They both have their own supply side and demand side solutions. Um, Applovin has this successful model called Axon, which is their machine learning ad targeting model, or app discovery model, and they have been printing cash. They are trading at a valuation of $150 billion. Now, Unity software is a game engine. You have probably heard of Unity, like, in the past. They're trading at a valuation of $11.2 billion, and obviously they're making a lot less money than Applovin. Um, so first, when we look at these companies, we need to understand what they are doing and they are um, how they're uh, running their business. Um, Applovin has a mediation business, so Applovin is able to see which ad network bids how much to show what ad to, you know, to who. Like they see everything happening in their own mediation. They are the mediator. So with that knowledge, they use that knowledge to compete against the ad networks bidding in their own mediation. And obviously, as you can tell, they have the upper hand. So their ad network performs pretty good. They Yeah, that's basically what Applovin is. Their mediation max is pretty dominant. Um, it has always been dominant. I mean, they Max is basically Mopub. They acquired Mopub years ago, um, but obviously at this point it was not as like valuable as it is today because they were not utilizing it as efficiently as possible. Now, yeah, they're leveraging the mediation as much as they can. They're not just obviously using the data from the mediation, but they're also um, charging other net ad networks bidding in their mediation 5%. So they're making money left and right. Um, when you look at Unity software, this company used to be a complete failure. Um, Obviously, they had their prior CEO, John Riccitiello, um, was not a good CEO, but he grew the company quite a lot. Before they IPO'd, they had a valuation of like $1 billion. Then the valuation shoot up to somewhere around 50, I believe 50 or 70, I'm not sure, $1 billion at this time around. And then, yeah, I mean, they were not making money. The company was expensive as hell. And then the stock went down. Um, it has been flat ever since. But yeah, you need to keep in mind that we have had a a massive rally in the stock market. So the stock has been underperforming quite terribly. They have acquired Iron Source, a separate ad network. We will talk about that. Um, then yeah, I mean they were not successful. They tried to compete with Applovin. Applovin utilized their mediation dominance. Mediation, they used the mediation data before Unity. even did something. Unity was not doing anything at all, so it kept losing and losing and losing and everything. And we got to this point where Applovin is worth, I think, like almost 15 times more than Unity. Now, that's the history of, how we got here. Now we, obviously, if you're looking at these things as potential investments, we need to understand what will happen in the future. You cannot just look at Applovin and say, okay, this is a great business. Adam Ferrugi is a beast. They have great margins, EBITDA margins of above 83%. So this is a great business. Let's just invest in this. Obviously, you don't do that. You understand what these companies have and what they can become in the future, especially if you're looking at edtech space, because edtech space evolves quite rapidly. So, to give you an example, for example, looking at this chart, you can say, okay, Applovin is doing great. This is a beast, right? But trust me, this thing can go back down before you even realize it, because that tech evolves quite rapidly. If something better comes out, trust me, advertisers they don't care. They don't have loyalty. They're not loyal to a platform. They just leave you, like they did with Unity. Now, let's discuss the valuation and the bull case, and then the bear case of Applovin. So when you look at the valuation, I'm not gonna get into complicated details. I will just tell you these metrics. It's trading at a trailing 12-month price earnings ratio of 43, which is not cheap. This is not cheap, but yeah, I mean, if you do like forward price to earnings ratio, if you look at that, it will probably be a lot less. They're growing rapidly. So just to give you an idea, I have Applovin's latest report here. As you can see, their revenue has grown from $1 billion to 1.7, let's say 1.7 billion. But under the hood, okay, cost of revenue might have gone up because, again, yeah, I mean, compute cost goes up when your model gets larger and more complicated. But do you see this? Their sales and marketing expense went down. Their R&D expense went down. Their G&A went up, but it doesn't matter. So their expenses are not going up. Yeah, I mean, this company has grown very fast. That's something to consider. So this price earnings ratio, on a forward basis, will probably look like looks. I don't know. It will probably like. It depends on your expectations, but for me, I can say that it's like 30. Yeah, 30 is, for my expectations, is quite feasible. So it's trading at a forward price earnings ratio of 30. Now, is it cheap? Many people say it is. Why? Because if you look at people on Twitter, and they call themselves Applovin cultists, and I think this is the cult leader. Okay, that's weird. I mean, that's the weirdest thing I've ever seen. This is a mobile advertising company trading at a valuation of 150 billion, and it's like these people are acting like this is GameStop. But yeah, I mean, there are cultists, and they argue that 30 is low, or maybe this valuation is low because Applovin is growing quite fast. their entire argument is around, okay, Applovin has been growing fast, which is true. Applovin is growing really fast. But now, my standpoint is completely different, and I believe yours should be different too, because again, you cannot say that, okay, this company has grown rapidly. That does not mean that it's going to keep on growing at those rates. Um, so you need to understand the situation here. They have grown because both in-game advertising market has grown quite fast. Overall, CPMs went up. Plus, that combined with the fact that, okay, they were quite early with improving their model and using new machine learning techniques. So yes, those two things combined and they grew rapidly. Now, does it mean that they will continue growing rapidly? There are possibilities, um, but anyone can tell you that their entire bet right now to keep on growing into the future is e-commerce advertising in games. Um, Now, there's a complex discussion about that because, as you can tell, okay, they have completely, I wouldn't say given up on in-game advertising, but everyone knows that this company will not keep on growing at the same rates, considering their already high base, with the help of game advertisers, mobile game advertisers. Um, so their entire bet is on e-commerce. Now there are good things about this and concerning things about that. Now they have been working on this e-commerce thing for quite some time, and I believe it's in general. It's still not yet in general availability, but it was open to early. It was in early access, and I think they've invited quite a lot of advertisers. Now, the good thing is, I will start with the good thing. Um, yes, I mean e-commerce ads are quite different in nature compared to game ads. Why? Because imagine like you're playing a game, and then you're already playing a game, and then when you get an in-game advertising shown to you, you see an advertisement for another game, right? But your intent is already like playing the game that you're playing. So the the chances are that you keep on playing that game and skip the advertisement. That's one thing. So you're already playing a game. I mean, why would you click on the other game and play that? Obviously, it depends on the genre of the game. If it's like some sort of, I don't know, like fast-paced mobile game, okay, then yes, maybe you might click on the ad and play the other fast-paced game. But if I think they call them hyper casual. But if it's obviously an IAP focused larger game that Applovin is bidding in, um, then yeah, you will probably not click on the ad. So that's one thing. Yeah, that's why e-commerce or maybe non-game advertisements might be good. That's one thing. The other thing is the economics of e-commerce advertisements are very different than um, game advertisements. Why is that? Because the value, the CPMs are quite high. The CPMs are high because imagine like I I I see, I don't know, like a an an ad of Amazon, right? I click on it, I download Amazon, and then I spend money on Amazon, and Amazon makes money directly from me. Or even, I don't know, like something stupid like Ridge wallets, right? I buy I see the ad and I click on it and I buy it. the advertiser makes money from that, like directly makes money, a very decent amount of money. So, quite naturally, it is the economics of that is different than a game advertising, where the probability of me clicking on it is as low as that. But even if I click and download the game, many people do not make in-app purchases. um, so if I'm not making in-app purchases, the only value that the advertiser is getting from me is me watching ads in their game. So that's a completely lower value that they're getting. So those two things are okay, very solid, positive arguments for Applovin. Now, that was the good part. The bad part is ugly, um, because the bad part is that what data does Applovin have? What do they have that makes them, good at targeting for e-commerce advertisers? What do they have? I mean, they have mediation. Okay, they see which ad network bids how much in which game, which is valuable. But they are the only ad network that leans this heavily on e-commerce advertising in games. So they're not gonna get anything valuable in the mediation. Plus, like what can Applovin get, right? That's not Google, it's not Meta. Now, what they do was referred by short sellers, which is accurate because I've seen it firsthand. You know, I've seen it. It's true. They do fingerprinting, but they do cross-platform fingerprinting. So they have their identifiers and they have their, I'm not gonna get into details, but for example, if you look at, I don't know, like Ridge wallets, if you type it on Google and go to a website, if that website is a website that they can track, they track you all the way to any game. So they know what you are doing, and then they just show you that advertising. Now, is it legal? I don't think so. It shouldn't be, because I remember, I am a iPhone user, and I said, I chose Ask App not to track when I downloaded that game. And Applovin tracked me not just like across different games or apps within its own mediation, but it literally like tracked my website. I probably like my ID. So yeah, I mean it's been tracking my ID, which is concerning, which is a legitimate concern. Um, so that's the bad thing. They don't have the data. They don't have anything. And is it really a technology? That's the other question. Is that really a technology? The mediation, machine learning. I mean, it's a model. It. I mean, learning is not as complex as people would like to imply. It's not some sort of like, oh, black box. Data gets in, and then it gets smarter and smarter every day. There's no cap. No, it's not like that. Um, but is it a technology? I mean, with mediation and in-game advertising, it might be, because they collect data from MMPs, they collect all those datas. It could be considered some complex technology, but is fingerprinting and taking the IP address of people and literally like showing the same thing to them, is that technology, or is it just basic ad network stuff? It's up to you to decide, but for me it's not. And again, this company is not, it's trading at a very decent valuation. Now let's get to the valuation. You know, okay, their price earnings ratio seems low when you consider their growth rate, but there are issues because it's not as easy. You know, when you look at this, what do you see? The their margins are extremely high. Why? Because their R&D is extremely low. Their especially this is concerning. Why is it? Uh, Here's the reason. Let's say that Applovin is okay. Applovin is doing well right now. Is the dominant player. It has a tool. It has the mediation. It has everything. They just need to slightly reinvest in the business. Maybe again they're working on these e-commerce tools and other things that are slightly significant but not revolutionary technologies, which is okay. They have good margins. What happens if Applovin has the necessity to reinvest in the business or work on something complex? Or maybe they might not even need the necessity, but I mean they actually do to keep growing. But let's say they have been talking about creating their own social media platform, right? Do you really believe that you can create a successful social media platform with with these margins, with this much R&D and sales and marketing? I mean, Adam talks about being lean and being efficient, but I'm not buying it. I'm not buying it, and I know for a fact that they can't. So what happens is Applovin wants to own the inventory because that's the only way that you can be there for you can be safe. They have been trying to do this for quite some time. They tried acquiring Unity, or at least merging with Unity. They offered Unity a higher valuation than their own, and he offered Jean Riccitiello the CEO position. Why? If Applovin was some magical product, was some complex thing, he wouldn't do that. It is not, because he was afraid, Unity merging with Iron Source was a credible threat if they actually did something useful with their engine. They want to own the inventory. They want to own the first party connection beyond just mediation. That's why they want to own their own social media platform. That's why he actually did bid, you know, to I think invest in TikTok a year ago. They need it. You cannot, being the middleman is not safe. That's the main thing that people are missing. And the other thing, again, as we talked about it, if they do it, if they want to develop their own social media, trust me, these margins will compress a lot. These expenses will go up, and margins compressing. Now look at what happens to the valuation, right? I mean, if their EBITDA margin goes from 84% to, let's say, 40 41%, 42%, which is a normal number, which is normal, which is the usual number. 84% is extremely high. Then this thing goes from 43 to 80. You see the problem there? So the valuation is, I mean, you could say it's cheap if you assume that they will keep on growing at these rates with these expenses, but that's a very, very strong assumption. So, it's up to you to decide, but I don't see a magical, great investment when I look at this company. Now, obviously, there are some milestones, there are some dependencies, there are some ifs. If they can do it, then yes, but I mean, I don't see a favorable risk and reward here. Now, let's get to Unity. Actually, let me get let me make this video completely about Applovin, because it's probably going to be quite long if I talk about Unity right now. So let's see, what these people are and what what they what they're after. I don't know. The cult, there's a cult, which is quite interesting, because it's like it's a mobile advertising company, like, and it's you're not even getting it at a favorable valuation. This is not like it used to trade at 7 times free cash flow here. It's not the same anymore. But yeah, there is a cult, and these are all like the first impression you get from these people is like, I know people call Applovin like hedge fund hotel, but yeah, it's really like niche capital, capex and chill. They all seem like hedgy guys yet, right? Yeah, and then the CEO did an interview with this guy. I I did not really like the interview. I did watch it. It was not as good as these people are implying. Um, app loving cult, you have app loving cult, and then you have this again hedge fund, arguably hedge fund guy, or we can call them, I guess, supposedly, you know, seasoned investors, right? I mean, they seem to know something. They're not like your average GameStop guy, or not your average guy commenting on stock splits or Twitter about stocks, right? It's like, okay. I mean, there's a cult, I guess. And then this guy as well. This guy is like, he likes, whenever he sees a growing growing software company or growing business seemingly trading at a low PE, he just jumps on it, and he's not even looking at the story behind it, the complexities and what I told you. They all skip that. But yeah, I mean, you have, I guess you have this cult. Um, then yeah, I mean, you have guys like seemingly experts, and then you, for example, you have these guys. I mean, okay, you again this. Okay, the field looks like, the field research, when we do that, when we conduct it, we probably see, okay, this might really be a hedge fund hotel, even if not it, which it is. Okay, this is a seasoned investors are here, right? People who know you, who think they know what they're doing. Let's see the latest tweets. Actually, let me just. Yeah, I mean, it's not that, obviously it's not uh like, it's not a well-known stock, but still I think more, you know known than Unity Software in terms of the stock itself, but obviously the company is less known. um yeah, I mean, again, look, like capital this, capital that. Like, are these guys the same people? Because it's like, it's very strange. It's like capital this, capital that, all of them. And then you have, he says, what do you think about e-commerce? Let's see what he thinks about e-commerce. It's great for me and my friends. You need to extend the length. Oh yeah, he's giving the details. We already know this. I mean, this is not even valuable information. Uh, you need to double down on avatars. This dude is asking event that I should be at wallet share rather than 7. We are definitely under optimized, underspending. Okay. Yeah, I mean this is not. What is this guy? A an investor, or is this guy what? I think he's an advertiser. Okay, he is an advertiser. I will have a separate video about how these advertisers are so lame, especially not these people, but they're also kind of lame. But you know, especially like game advertisers and consultants. Um, as if this looks like an advertisement for Applovin stock. Like, what is this? Why are you putting the ticker symbol there? Whatever. But yeah, I mean, e-commerce could work. There is a possibility because the economics of that is very different. But they don't have anything special, you know. Even Moloko can do that. Can do what Applovin does. They just have the mediation. So maybe the end game would look better for Applovin. Shares outstanding has been quite flat. Even has it actually went down slightly. Yeah, I mean they bought back a lot of shares. Again, I mean, is this guy seriously like an advertiser? Like, what is this? Again, these people, Zeta, Applovin, like he just straight up jumps into those companies, and I don't know, like, what else does he have in his portfolio? Amazon, ASML. I mean, that one was, I believe, yeah, it should be successful. Uber, for example, Uber, Adobe, Zeta, all software names. I kind of understand the idea behind being bullish on software, especially at this point, since they have been underperforming quite terribly. But I don't like the way he, you know, assesses those investments. It seems more like he's just looking at the growth numbers. I mean, if you're investing in a company, you need to have almost the perfect understanding. So understanding financials, knowing what the financials look like, okay, I mean it's crucial, but it's not the differentiating factor. Um, the differentiating factor would be being able to guess what's gonna happen. It's not what happened. Understanding what happened. Understanding what happened is like the base, the simplest thing, but you need to be able to, okay, I mean you need to know how much you're paying for what. Again, I mean, it's all bots. Again, I mean, this, like, again, capital, like, there's no way these are separate people. The cult, and then you have this this Jason guy. Jason guy, I think that guy is quite unfortunate. I mean, I think I've seen one of his tweets. Yeah, and he's tweeting about Unity and Applovin. Yeah, I mean, you have these people. You have relatively more mature investor base here, but I don't know, man. I think they're gonna be disappointed. Yeah, yeah. And then you have again these people was like the same thing. They see a company growing, and if they're trading at a low PE, they just, I mean, not even low PE, like 30, 40p, they just jump on it. Like a company that is not as bad, that does not have a crucial weak point, but it's also, you know, it is not certain what's going to happen. And these guys see these companies, they just jump on it. But yeah, I mean, I guess this is our first video. See you next time.